ها هو الخبر اللي قلت لكم غادي نديرو لكم دابا، هو سجلته دغيا يلاه جا الخبر هو 0.75 هي اللي دارت 75 بيس بوينت هي اللي تزادت في الانترست ريت which is high. فهمتي؟ وكان المولف كي اجوتي غير 4 ودابا راه اجوتو بزاف، تزادت بزاف على الانترست ريت. حنا كنا معولين 100 ولكن 75 راه حتى هي بزاف، ولكن ماشي كيف كنا وي اكسبكت بيفور. الماركت كله داون، راه كتشوفوا كلشي داون 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 داون، وغادي يهبط ربما حتى هذه الليله. عاد الله غدا الا كان شي خبر زوين بالنسبه للشوماج في الميريكان ما تزادش فيه بزاف which is very good news. دونك صافا. المهم هذا غير الخبر اللي بغيت نقول لكم دغيا. راك الا شتي العمله طاحت ما دونت بانيك، اتس فاين. راك عارف الميريكان ديما هي اللي كترون الدنيا كامله، والفاد يلاه هضر دابا وغادي يزيدوا في الريت. الانترست ريت غيتزاد فيه عاوتاني باش يصعبوا على الناس باش ياخذوا فلوس، باش يحاولوا يهبطوا من الانفلاسيون اللي هي التضخم. سمعوا هذا المقطع هذا، وان شاء الله بحول الله نديروا فيديو التفاصيل ونهضروا عليه الا كان اهم مهم عندكم. خبر زوين هذا.
The Federal Reserve raising interest rates by 0.75 percentage point to a new range of 3 and 3.25%, the highest rate since early 2008.
This is the news.
The Fed saying that ongoing increases will likely be appropriate in the funds rate. The Fed also saying inflation remains elevated. It's sharply raised the median forecast of a Federal Reserve official, sharply raising the outlook for the funds rate for this year to 4.4% from 3.4%.
The Nasdaq
full percentage point. By the way, that is a little higher than the market was going into this meeting here. For 2023, the median forecast is for a 4.6% funds rate. Again, a bit higher on the peak rate than where the market was, and that was from 3.8. For 2024, the median forecast is 3.9 from 3.4. 10 members do see a number below that 3.9 level, so if you want to think about the Federal Reserve cutting rates, that looks like it's going to happen sometime in 2024, getting back down to the new number we have for 2025, and that is 3.9%. A sharply lower GDP outlook, just 0.2% forecast for this year, down from 1.7, 1.2% for 2023, down from 1.7, and then gradually the Fed sees the economy, economic growth getting back towards the trend of 1.8%. A big but not tremendous increase in the unemployment rate outlook, 4.4 for 2023 from 3.9, so almost a percentage point or more higher than the low rate of 3.5%. Inflation nears the target of 2.3, not until 2024 hits the target of 2% in 2025. Going back to the statement, very much a cookie cutter statement.
Dollars is going
the July,
up, of course.
Wording saying modest growth in spending and production. It had said it was softening. Now it sees modest growth. Continues to see robust job gains and elevated inflation from supply-demand imbalances, higher food and energy, and broader price pressures as well. The committee remains on track for that $95 billion reduction in the balance sheet, and the decision was unanimous, with, I believe, the first time we've had 19 members of the Federal Reserve with a full Federal Reserve governor for maybe as almost a decade. Tyler, back to you.
Steve, thank you. Let's bring in the panel now. Bob Pisani from the New York Stock Exchange, Rick Santelli also joining us. And Rick, let's start with you and the move we're seeing in the bond market and stocks, which are reversing early gains. The S&P 500 now trading in negative territory, a 75 basis point rate hike.
Yes, I'm watching all the different maturities on the yield curve. And one thing I can tell you is right before the Fed announcement, rates were virtually unchanged. We're now up 13, 14 basis points on the session on a 2-year. The high yield on a 2-year now, 4.11, 4.11, 4.11, like we used to call information. And on the 10-year, the high yield thus far on this move, 3.62%. Fed fund futures, and there's so many contracts. I'm looking at the January. It dropped like a rock down towards 95.66. When its prices go down, the Fed presence goes up, but it's bouncing a little bit, and you are seeing yields very volatile, and I described the way they move, but they are easing back just a bit. Of course, waiting for Q&A. Ultimately, another dynamic was prevalent right before the announcement. 30-year and 10-year yields were on top of each other. It actually inverted briefly. That's a very unusual inversion because 30s to 10s, known as the knob spread, since 2006 has only had 2 sessions, and they were both this year where they closed inverted. You want to pay attention there. And last but certainly not least, the dollar index, certainly the beneficiary of the path the Fed has taken.
always got.
All right, Rick Santelli, thank you very much. Let's check in now with Bob Pisani. We had basically there a 200-point swing from where the Dow was, I'm talking about, Bob, right on the precipice of the announcement to where we are now, which is down 168. We were up about 160. Now we're down 160. That's, what, 320 points, actually.
Yeah, and I watched the S&P. We were at 3880 or so, and we've dropped about 40 points or so since then. And it's very obviously why. This is what the market didn't want, the higher for longer scenario here. So we have a higher Fed funds projected rate for 2022. We have a higher Fed funds projected rate for 2023. No reductions until 2024. Not quite priced into the market, so very understandably why the market has moved down here. So we know why Powell's been so aggressive here. The stock market's rallied, the labor market's strong, and inflation stayed higher longer. And even if it is peaking, it's still higher for longer. So the 2 issues I polled traders this morning, and the 2 issues I got was, number one, they want to know how high the Fed fund rate is going to be, the terminal rate. Obviously, it's now higher than people had thought earlier. And when does concerns about over-tightening really start to kick in? That's what they want to hear at the presser. So I think the problem for the presser now is Powell is going to maintain maximum flexibility. He's going to not give any hints about the next rate hike. Obviously, there's implications. It's going to be potentially 75 basis points. And he's certainly going to push back against any pivot next year. For the market here, remember, we're about 5% above where we were at the market lows on June 16th. That's 36.66 or so. And is there anything at the press conference that might sound a little less hawkish? I think if he would acknowledge somehow that they want to still see some